The Indian market makes a strong start. The banking index hits a record high led by the PSU banks. The Nifty too approaches that 26,000 mark, while the mid-caps outperform key indices.
Glenmark Pharma opens with cuts as the numbers take a hit from multiple one-offs in the second quarter. The stock sharply recovers from lows as the management says it does not expect further exceptional losses and guides for margin improvement and a strong FY27 for the US business.
Tata Motors passenger vehicles is the top loser on the Nifty after second quarter numbers miss estimates on all fronts. Jaguar Land Rover's margin guidance too is cut from 5 to 7% earlier to 0 to 2%, while outflows are expected to rise £2.5 billion.
IRB Infra rises after a good set of second quarter numbers and as the company emerges as the lowest bidder for a record NHAI project. The management also expects the tolling business to do better in the second half of the year.
Idea Forge rallies almost 10% as the company secured orders worth 107 crore rupees from the Ministry of Defence.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see to the top of our screens, we should get the rates that should come up there. Yep, green on the screen, mildly so, but the breadth of the market is looking pretty okay. And the Nifty Bank, that's the one that's leading the way. Hey, Mangalam.
Hi, Nigel. Yes, the Nifty Bank leading the way, 58,000, important support for that one, and 26,000. Can we cross past that on the Nifty or not is the big question, because over the last few occasions, every time we've gone there, we've seen some bit of supply. So that's something that we will have to track as we go forward. But we have a lot of corporate conversation that's lined up for you on the show today. And the company that's joining us today is Sky Gold. Now, over the last 6 months, the stock's been fairly volatile between 250 to around 400 itself. If you look at the reported numbers, the P&L, strong revenue growth is what the company has reported, with operating margins improving as well. But the operating cash flow, however, that remained negative. Mangesh Chauhan, who's the MD of Sky Gold and Diamonds, joins us now to discuss the quarter gone by. Good morning, Mangesh. And that really is the first question. If you look at the first half of this year, your revenues have grown 75%. But at the same time, your receivables have grown 40%. And your cash flow remains to be negative from operations for the last 5 years or so. So just wanted to understand the receivable cycle for the company, and why is it that despite the sharp compounding in revenue, it's not converting into operating cash flow?
Again, you can see our company is into hyper growth. We are growing by 40-50% growth. So that's why we are cash flow negative till 2027 March. And after 27 March, we will be 100% cash flow positive company. So about the receivable, I will tell you in the days wise, we have reduced the receivables. We were at 73 days cycle in March. Now we are at 65 days cycle. But in absolute number, it has increased because our volumes has gone up. We have grown volume by 20% and revenue by 30%. So our sales have gone up by 30%. That's why in numbers it have increased. But again, we have opened our international Dubai office, where receivables are very low. And we have again accelerated our advanced gold business, in which golds come with the order to us, so we don't have to fund the receivables and all. So that will help us to reduce our cycle, and in future 6 to 8 quarter, you can see our cycles will come down to 50 days. By 10 days, it will reduce, and 100% of our receivable also will reduce as coming quarters.
All right. Hi, Mangesh. Good to see you. The stock has done very, very well. Revenue growth has been very, very good. So you're saying by FY27, you will turn operating cash flow positive. Is that correct?
Yeah, perfect.
Okay, all right. But tell us, explain this to us. The cash from financing activity, that's gone up big time from 10 crores to around 400 crores. Explain to us, why would you do something like that? Even you have a fixed deposit, I believe, of around 130 crores. Why not you just use that money instead of keeping it in a fixed deposit? Use it for your own working capital, right?
So again, we have put this fixed deposit into bank collaterals, and we get a GML gold metal loan at very cheaper rates. So when we keep a FD at 7% or 6.5%, and we are getting a gold metal loan at 3%, so we gain from that income also. And Government of India, RBI, has given a provision for the renowned manufacturer to use this gold metal loan opportunities for the manufacturer only. So we are slowly going from CC limits to gold metal loan. Already we have used 8 to 10% of the limits. And in coming 3 to 4 quarters, we will be at 70-80% of gold metal loan. That will help us to reduce our interest cost, which is below the EBITDA and all. So that's why we have kept so we get 3 times, 4 times more leverage of gold metal loan. When we keep 100 crore FD, we get 400 crore gold metal loan.
Got that. Just one more question around the balance sheet itself. While your receivables have increased and, because you're saying it's on account of hyper growth that you're doing, you have increased your provision for doubtful debts as well. This was about 30 lakhs in the previous year, and that's increased to about 1.5 crores. So there's worry, right? Because of your growth and not receiving money immediately, there could be a case for you not getting that money eventually. And that's why you're increasing your provision.
So it's not like that. As per the auditing policy, we have to keep the provisions for that, but all the accounts are active, and 1.5 crore is a very small amount, and it's also going to come in next month. So it's as per the accounting policy, we have to keep the provision, but all the debts are very active and positive. So we, as a B2B manufacturer, our debt is into A plus and A rated customers. All the big corporates of India, like from 50 to 40 topmost client we have, and all our receivers are under large corporates. All the large corporates all have the rating of A plus and all. So that's why as already we told, we are into hyper growth, and we are going into volume growth also, revenue growth also.
Okay, all right. Since you led me to the next question, let me ask you. A lot of big clients you have, right? Name the top 3 to 5 clients.
So again, we have Kalyan Jewelers, Joy Lucas, Senco Gold, GRT Jewelry, Jos Lucas, Lalita Jewelry. Many clients we have.
Okay.
And again, Carrot Lane, Aditya Birla, all onboarded before 2 quarters or so. Carrot Lane is also giving us advance gold to do the business. We are going good with Carrot Lane, which is subsidiary of Tanesh. Aditya Birla itself started the business with us.
So, with all these big clients, what is their average payment cycle, and how many of them are currently more than the 180-day bucket for you?
So on average, they are at 40-45 days, and average our receivable cycle is 30-31 days, and which is going to be improved to 20 days, because the new business coming is totally cash and carry business with exports and all, and advanced gold business is picking up from 2% to 6%, and we are picking up to 12%. So you will see gradually in 3-4 quarters will come down, and receivable as maximum 40-45, average is 30 days. So nobody is. Okay. Is about 50 days.
I was looking at your balance sheet between March and September, the acquisition that you made, because of which your goodwill has increased from 42 crores to around 250 crores. Why do you pay so much over and above, the actual value of assets? And is there a case that in the very near future this goodwill would be impaired, thus impacting your bottom line?
So we have acquired a company which makes Italian type products of bangles, which is very exclusive in India. And this company works on totally advanced gold business. So we are expecting we don't have to invest any amount in it. It is very high ROC accretive company, and this subsidiary will work on totally advanced gold business. So we are expecting 50 kg per month in this year, and next year 100 kg per month, and third year is 150 to 200 kg per month. So we are expecting a good PAT of 40 crore in next year from this company, and 80 crore in third year. So it is a ROC accretive company. That's why we have acquired this company, and no impact will come on this.
All right, Mangesh, a simple question now. You're heading the company. Ideally, a promoter would like to maintain a particular stake in a company. And if I look at the promoter holding, it's still majority, more than 50%. However, since, in the last 24 months, it's come down from around 70%, 73.5% as of September 2023 to around 51.7%. Is the promoter done with the dilution, with a little bit of sale in the market as well? Or is there more to go on this front? Because ideally, a promoter would like to have a bigger chunk of a business that, as you're saying, is going to improve. Point number one. Point number two is, I think you were talking about, appointing a bigger auditor. It's one of the, the big four. Is that on the cards? Because currently the auditor is quite small. Please go ahead.
Again, you can see in 2023, we came in main board, and we opened a facility of 1 ton per month. So we were at 30% utilization. That's where we done a fundraise of 2 times in that year. First was from HNIs and second from mutual fund. And we had got all the clients on board, and we were at a 1 ton facility. We got major orders from the large clients of our in India. So that's why we diluted ourselves to accelerate the growth. and revenue and again profits and all. And I think we don't need to dilute from here to 3-4 years because we will be cash flow positive in 2027 March.
Okay.
So last year that was the need of the company. We came into a new facility. Last facility we have many orders to cope up with them.
So promoter holding will not fall further from here. 51% is what promoters will maintain.
Already we have done an OFS in June month.
Yes, so you'll maintain it at 51%, correct?
Maintain it 50.
Correct. And the auditor, the appointment of the auditor, you
already appointed Big Six. Big Six already appointed. We need to follow the compliance to announce it, but we are going for Big Six. And next year will be audited from Big Six.
All right. Since the promoters, both you and the other Mr. Chauhan, together got about 50 crore rupees for acquiring sparkling chains and, Star Mangal Sutra in the main company, would you not want to plow that back into the company and increase your stake?
Again, as we said that June only we done the OFS that compliance does not allow us for 6 months to deploy any cash from the director side. There should be a 6 months gap between that. So as and when required an opportunity comes, we director are will be happy to deploy that. But now there is a 6 month compliance period. We cannot deploy.
And a final question before we let you go. Now, because you have international operations coming in, a new facility that you've opened, etc., what rate would your revenues compound by over the next couple of years? And what would your margins be?
Again, we are targeting to be at 4.5 ton per month in 2031-32. We are going to open India's largest standalone facility of 540,000 square feet, which will be started in 2028. And we are at 0.6 ton per month. And when we enter that facility, we will be at 1.2 ton per month. And we are targeting to be 4.5 ton per month, which will be India's largest standalone facility. And when you come to India's jewelry, India makes jewelry something 600 ton. So we are at now 1.5% of India's stake, and we want to be at something 4-5%. So vision is to be India's largest manufacturer by 2031-32, and we are taking step ahead.
Okay. All right, Mangesh, appreciate you joining in. Thanks for clarifying on a whole host of issues. Some of those questions as well, you've answered, but we'll have to track you to some of those numbers. Wish you well, and we look forward to chatting up with you at the end of this quarter as well. The stock has been one of the big outperformers, but various questions on the balance sheet as well as on the operating cash flow, which the management says that they will be addressing in the time to come, and promoter stake will not fall as well. Well, time to slip in a short break. On the other side, we have Aditya, a senior research analyst at CLSA, who will be joining in to discuss the trends in the consumption sector. Stay tuned.
Welcome back. You're watching us here on Chartbusters. The Nifty holding around the green mark with a 27-point uptick. Remember, in the morning, it went closer to that 26,000 mark. From there, we've seen a smidge of a supply, but no real worries when it comes to the Nifty Bank, the mid-cap end of things as well. We've been discussing the consumption space before we went into the break, but now let's continue with that. Aditya Soman, who's the senior research analyst at CLSA, joins in as well. Aditya, one of the sectors of the day on Friday happened to be the quick service restaurants, and that's largely because of Jubilant FoodWorks' strong performance, 9.1% like-for-like growth, head and shoulders above everyone else as well. And right now, as we speak, a couple of other names, you had the likes of Devyani International and Sapphire, both of them buzzing around as well. Basis the numbers that have been reported and basis the triggers that may come about, what's your view on this space? What would the top picks be? And is there a possibility, according to you, where, both Devyani and Sapphire, perhaps if, have any agreement between the two of them, makes them an investable idea?
Yeah, thanks a lot for having me on, and it's always good to be on the show. So firstly, great question. So look, the QSR space has been sort of out of favor for, I would say, the last 6 or 7 quarters. And in fact, if you look across the board, we've generally had relatively disappointing numbers, even this quarter. I think that being said, we are starting to see the worst behind us. They are a big beneficiary of the GST cuts, particularly on the input cost side. So while we haven't seen the headline GST on the output move, I think a lot of their inputs did see GST benefit, and that should flow through in terms of more attractive pricing. There's also the most QSRs have come to terms with the aggregators, and that's been a sort of key theme where either companies like Jubilant and Domino's in particular have done a great job in getting their own app up and running, but we've also got the other players sort of working a lot better with the aggregators. That being said, I mean, overall, we still remain quite cautious on the space. I think the only outperform idea we have here is RBA or Burger King. And two reasons for this. One, I still think the sort of competition driven by the aggregators remains elevated. So if you look at sort of profitability growth across the sector, including for the likes of Jubilant, which had sort of strong LFL numbers, profitability growth still remains relatively muted. And our concern here is that these companies will continue to have sort of give up more on gross margins to drive growth. That being said, the worst as far as LFL or SSG is probably behind us. And from here, with sort of improving momentum with the festive season and the GST cuts, you should see sort of better growth.
And what about...
And on your question on sort of Devyani and...
Yeah.
Yeah, on your question on Devyani Sapphire, while I don't want to speculate on sort of any sort of transaction, obviously we've seen in the past that where you have multiple franchisees run operations, it becomes a little more complex. So if you have a single franchisee, we've seen those businesses do a lot better than those with multiple franchisees. So to that extent, at least from our conversation with investors, any sort of transaction would be welcome. Though, again, I don't want to speculate on whether this happens or not.
All right. Hi, Aditya. Good to have you on the show and hope you're having a good conference. What about on the durable side? How are you all seeing demand pan out? Is it as much as you're expected? Has Q3 been a little bit better? What's your take?
Yeah, no, great question. I think even on the durable side, we've seen an improvement, obviously, in demand in the festive season, given the sort of GST cuts. If you look at the paint sector, for example, I think we've seen after a few quarters, Asian Paints come out and record better numbers, and we've got commentary from them improving as well. So all in all, we expect an improvement in consumption. Now, we've put out a big sort of 480-page report on the consumption in India. And one of the themes we're highlighting here is how sort of the affluent are becoming even more affluent. So we expect sort of the affluent and middle class cohort to go from 50 million households today to about 85 million households in 10 years. And to my mind, this will be a big driver of premiumization and of durables consumption. So structurally remain very positive on the theme, though I would be selective on the names based on where evaluations lay.
Since you're speaking about the premiumization space, I have a question on two particular areas, and I don't know whether you cover them directly or not. One of them would be Alcobev, the premium player right now, Diageo, also looking to strategically review its stake in RCB. So could that be an important event with some more capital coming into the business, driving premiumization further? Or would you look at some of the mid-tier companies which are now increasing their premium part of the portfolio, the likes of Radico, Khaitan, etc.?
Yeah, no, great question. I think overall on the space, I'm very positive. So on the Alcobev space, particularly the premiumization in the space, right? So the prestige and above category, as you know, has shown very strong growth across the board for many companies. Now, we've had a bit of a disruption because of sort of the tax change in Maharashtra. But all in all, if you exclude out Maharashtra, growth has been very strong. Particularly if I were to dig in for companies like Radico or even ABD, I think we've seen them really launch many premium brands and them growing much faster. So we are seeing a significant uplift in revenue per case. And this is a trend we expect to continue, especially as they go beyond sort of just the whiskey category into sort of newer spaces as well. Coming to sort of Diageo, even here, I think the whole sort of free trade agreement with the UK should be a huge positive. I think in the previous quarter, we already saw an uplift in the gross margin driven by higher sort of BIO primary sales. Now, it will be sort of interesting to watch how those primary sales convert into secondary sales as we enter the festive season. It should be a fairly strong festive season across the board. So, yeah, as I mentioned, we are positive on the space. And I think we are just at the start of this whole run of premiumization for the companies, whether it's sort of the market leaders like Diageo, but also the mid-sized companies.
How much in your model have you priced in the stake of RCB in your SOTP?
Yeah, so at this point, we've got about 1.27 billion valuation in US dollars for RCB. I know that press reports have suggested about $2 billion valuation. So anything sort of around that mark or higher will be seen as a positive. Now, from a cash flow perspective, this has sort of been a key focus for Diageo ever since they took over UNSP to focus on sort of the core business and over time sort of offload the non-core businesses. And I think with this remains on track.
All right, take that point. Thank you so much, Aditya, for joining in. Quick conversation. Continue to do more of these and not just at your investor conferences, but maybe your compliance give you more freedom to speak to us more regularly as well. Wish you good luck. Take a short break, come back. We get you more on Chartbusters.
Welcome back. Well, markets holding quite well. The Nifty is up close to around 30 points, as you can see. But the real winners out there, the Nifty Bank, that's on its way to around the 59,000 odd mark. Beautiful looking move out there. And the breadth of the market as well, quite good. So we managed to get through Chartbusters with the markets in the green. Let's see what the team of trading has up for you next. Stay tuned.